Sinking fund method of depreciation. Under this method, provision for replacement of fixed asset after a particular period is considered. From the cost of fixed assets, salvage value is deducted and the balance amount is multiplied with sinking fund table value to determine the yearly depreciation. A salvage value is the value likely to be received on sale of fully depreciated fixed assets. It depends on the rate of interest and working life of fixed asset. Depreciation charge every year is invested in marketable investments and the income received every year is also reinvested at the end of the year. At the end of life of fixed asset, investments are sold and any profit or loss on sale of investments is transferred to sinking fund account. Amount of depreciation charged every year is charged from profit and loss preparation account and transferred to sinking fund account. Interest received every year is transferred to sinking fund and invested with depreciation charge every year. Now we are going to have the journal entries. First year, at the end of the year, profit and loss preparation account debit to sinking fund. Variation would be being amount of depreciation charged from profit and loss preparation account transferred to sinking fund account. Then the next is sinking fund investments account debit to bank, being purchase of investment. So in the first year, at the end of the year, you have to pass two entries only. Then in subsequent years, that is in the following years, on 31st December, you have to pass the four entries. First is for receiving interest, bank account debit to interest on sinking fund investments account, being interest on sinking fund investments received. Next is interest on sinking fund investments account debit to sinking fund account. Interest received on sinking fund investments transferred to sinking fund account. Then the third is profit and loss preparation account debit to sinking fund account. Amount charged from profit and loss preparation and transferred to sinking fund. Sinking fund investments account debit to bank, being investments made with profit and loss preparation account and interest received. In the last year, profit and loss preparation account debit to sinking fund account. Amount transferred to from profit and loss preparation to sinking in profit and loss preparation to sinking fund account. Then next is bank account debit to interest on sinking fund investments account. On receive for receiving interest. Then if we are selling the investments, bank account debit to sinking fund investments account, being sale of sinking fund investments. If there is a profit on sale of investments, sinking fund investments account debit to sinking fund account, being profit on sale of investment transferred to sinking fund account. If there is any loss on sale of investments, reverse would be the entry, that is profit and that is it would be the reverse entry. that is sinking fund account debit to sinking fund investments account. Then in the last year, the entire balance of sinking fund is transferred to general reserve. So sinking fund account debit to general reserve, being balance of sinking fund transferred to general reserve. If we are buying a new fixed asset, so we will give debit to new fixed asset and credit to bank. So for purchase of new fixed assets. If you like this video, kindly like, share and subscribe it. Thank you very much.